they have very limited options after they outgrow their first space, which maybe is a garage, maybe a bedroom. As they get to that next level, the options drop off. They need to sign a 5-year lease, and there's not a lot of space that's available sub 5,000 square feet. So what Portal is doing is being an institutional level provider of small warehousing space.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
I've got Andrew and Alex with me here today from Portal Warehousing. Andrew and Alex, welcome to the show.
Thanks so much.
Thanks for having us.
Absolutely. The pleasure is mine. I always ask every guest who comes on the show in 90 seconds or less, where did you start? Where are you now? And how did you get there? And Andrew, if you don't mind kicking us off by answering that question. And then Alex, I guess we'll have you be up next after that.
Yeah, no problem. Thanks for having us on. We started the company about 3 years ago. We just opened our 4th warehouse we've got 4, Salt Lake, Tempe, Brooklyn, and LA. It's been a journey, and we're growing and just moving on to the next one as we go. So I'll let Alex take it from there.
Yeah, I mean, the genesis of the company actually came at the start of COVID, when the world changed, and traditional methods of real estate were kind of changed overnight. And I was based in LA, and the only thing you could tour for the first 6 months of COVID were industrial buildings. So we looked at buying a lot of industrial buildings through my last the company I worked for lastly, which was a real estate private equity company. And ultimately, that journey led us to developing an operating company that could plug into vacant real estate and add a lot of value. And that 3 years later is Portal. And what we do is effectively we're a co-warehousing, flex warehousing operator. So we provide industrial space for businesses of all sizes to use for all sorts of purposes. But basically, the solution is a flexible industrial product that serves a lot of needs on the logistics side and the warehousing side.
Okay, that's really, really cool. I love that. And the name again of your company is Portal Warehousing. If you want to learn more about it, I think it's join-portal.com. So give me a breakdown on that. Like, who's a customer? What is flexible warehousing? I know we talked about this before the show. You guys said something along the lines of you feel like where you are now is where maybe self-storage was 30 or 40 years ago. Kind of give us just a broad overview if you can.
Yeah, like I'd say from a fundamental perspective, if you think about an industrial business or an industrial user of space, there's a long tail of users that are smaller. The Amazons of the world take on 50,000, 100,000 square feet plus of spaces, but there's a massive amount of companies that just need a couple thousand square feet or less space, and their options are super limited. So the genesis of Portal was actually thinking about our network in the e-commerce space and learning, their kind of supply profile as you start a company, and think about the last company you saw advertising or purchase from on Instagram. These companies have products, they need somewhere to store them and fulfill them out of. They have very limited options after they outgrow their first space, which maybe is a garage, maybe a bedroom. As they get to that next level, the options drop off. They need to sign a 5-year lease, and there's not a lot of space that's available sub 5,000 square feet. So what Portal is doing is being an institutional level provider of small warehousing space.
Got it. An institutional provider of small warehousing space. Is this kind of, we're going to use this, maybe not the right term, but we see it happening across Airbnb 10 years ago. Hey, we're doing, people are renting out their houses on Airbnb. We're seeing it happen in the parking industry where anybody with a lot that can park a semi and some other things, those get, turned into, semi parking spaces. And you guys kind of saw this, I guess, same opportunity in, again, smaller, potentially unused spaces, and or maybe you're taking big buildings and converting them. I don't know. Is that kind of, am I thinking along the right lines here?
Yeah, exactly. The thought is there's a massive amount of customers out there that need a functional place to operate. They don't need the 32-foot clear Class A building. They just need an industrial logistics environment with a dock door and loading and a commercial address. And we can take spaces that range from your Class A warehouse to, our newest location in Brooklyn is actually on the 7th floor of a multi-story a true multi-story warehouse that was built 100 years ago with freight elevators and logistics for that manufacturing kind of company. We can plug our customer in that just needs a highly functional space and some logistics services and basically fill buildings that, are antiquated from today's traditional logistics perspective.
Got it. Okay, that's really, really cool. Tell me, I guess when you guys are all over the country, you said Salt Lake City, Tempe, Brooklyn, Los Angeles. How do you underwrite? How do you even figure out if this model will work where you guys are going?
I mean, there is an enormous demand. We think this product works in honestly every city. We have to be smart on location. We're really focused on infill amenitized markets. If you think about our customer profile, which Andrew can kind of jump into a little bit, they want to be in a convenient. We're really selling convenience as well as space here. The core product is space, but it's also the alternatives are very slim. So our customers are paying for high quality functional space near where they work. So generally that means last mile locations that are infill. They'd rather be in downtown LA than going out to the Inland Empire, for example. And Andrew, why don't you show Sam some of our example kind of customers that we work with.
Yeah, we've seen a lot of crossover, Sam, between, people doing industrial work, but also doing e-commerce work, but also using the spaces where they work out of as well. So you've got your side hustler, you've got your Amazon fulfillers, right? You've got all those kind of profiles that come across, but also a lot of service industry customers where, say an AV company, right? They get a contract to do some restaurants in Phoenix, for example. We've had this numerous times where they come in, they use our warehouse to fulfill their contract, then they're gone, right? So it's flexible. They're signing a 6-month lease or a 12-month lease, and, that's it.
That's really interesting. Hey, how does it work? I guess, from a build out perspective, are you guys subleasing space from another, are you guys buying the warehouse and then, making it into smaller bays? Or are you guys subleasing space and then leasing that out again? Like, how are you guys finding the properties and then plugging the right tenant into the right spots?
Yeah, just to kind of an example is our building in Brooklyn. We have a bunch of different strategies. We do select leases, but generally we're moving away from that. We're doing mostly management deals now, and then acquisitions through some of our capital partners, where our partner buys a vacant building and we come in and operate it and generate a pretty big increase in NOI, because we're generally getting at least 3 times market rents on our spaces, because we're making them much smaller than a market lease is. So we'll take a 50,000 square foot warehouse and break it down into spaces that average about 500 to 700 square feet, where 50 companies can operate out of. And we have a logistics operational component where we help them with a bunch of services and give them an awesome space to work out of. But for the most part, they're doing their own business within their own space. It's private, but they share the logistics infrastructure. So we're allowing companies that will never have access to things like a dock door, because generally it's hard to find that when you are below 5,000 square feet and don't want to sign a 5-year lease. Where do you find infrastructure like that? We can provide someone who needs 200 square feet of space with a commercial, dock door, which allows them to grow their business very quickly and grow with us.
Got it. So are you guys moving, maybe I misheard this, but you're moving away from the actually buying of the warehousing and then leasing them out and more into the management model? Is that kind of what I'm hearing? Yeah,
the last 2 deals that we did were management deals.
Right.
And one of them was an acquisition through a partner of ours, and the other was a third-party management deal. And we're seeing a lot of opportunity with that as the product matures. Right. And the track record kind of appears, and it looks really good, honestly, our track record in terms of filling space. Our buildings are 100% full, generating big premiums. People are saying, can you do this with us? Can you do this in our building? And we can take some of these funkier buildings that are in, gentrifying pockets, but are not Class A industrial, and generate like Class A plus rents on those.
Right. No, that makes a lot of sense. And I would think from a scalability model, I mean, that's far more scalable than you guys one building at a time, taking it, building it out, doing whatever you're going to do, then managing it, and then going back to the next building. Like at this point, your customer base is nationwide. You're just running the management side of it. How does that work? Say I came to you today and I said, hey, I need 200 square feet in, Salt Lake City. Like, how do you define what that 200 square feet is, and where does a customer, I mean, what's that space even potentially look like?
it's pretty small, but it works for a lot of people. But it's already set. It's got a key. It's got a door. It's already set. We've modeled out how many we need of that size in each of our locations, and we've got 250 square feet, 500,000, and then 1,500 square foot spaces that are just predefined, and people make it work, and they can move in same day. Really, we've made it really easy. We've automated everything.
So it is a lot like, I mean, a storage unit. It's just you walk in, you get the keys. Hey, this is the size, like you said, 250, 500. What was your next one? 1,500 square feet, something along those lines. You can pick one of those three sizes and boom, you're ready to go.
Yeah, and we've
Yeah,
taken a
we
lot of
think
learnings from storage, right? We've taken a lot of learnings there and really automated things and made it pretty easy. We only have one general manager at each location. So operating a 40,000 square foot warehouse.
Right. Okay. What were you going to say, Alex?
I was going to say we mentioned earlier on the call that we see a lot of similarities between storage. I think another name for this product is could be like industrial self storage, where it looks like self storage, it feels like self storage. Our customers are not people; they're businesses, and it's a very diversified rent roll. And we're cutting up space. It's a month. It's changing the model to a monthly model versus a per square foot model, and that's what storage does. And you can get some pretty big premiums when you do that. So we do think this is like an early asset class that you'll see more and more of. And just like self-storage, 30 years ago, it was a mom and pop industry, or maybe not institutional industry. And now it's a darling of real estate. So, not to say that will become of this, but I think it could. I really do.
Got it. So let's say you rent that 1,000 square foot space or 1,500 square foot space, but I am looking, I think one of the things that you mentioned here was that all of your spaces have a services component that goes along with it, maybe that you're not going to find. I guess what I'm searching for here is the differentiator between self-storage and what you guys are doing. And I know there is one. So maybe you guys can clarify that for me, because when I see here 200 square feet, I'm thinking, well, why not just go rent two 10 by 10 roll up storage units, and then you're at 200 square feet, and it's probably less than maybe what you guys do, but there's got to be some differentiator there. So tell me what that is, maybe.
I think there's two. The docks, as Alex mentioned earlier, right? You can't find a loading dock at such a small space.
Right.
And then second would be, we receive goods for people. So say you have 6 or 7 pallets coming in, you let us know, we'll grab them off the truck for you.
Wow.
Pretty simple. And we'll throw them in your unit if needed, or, if you can't be there. So companies are saving, that labor piece, right? They're saving the money right there by not having to have somebody at their warehouse at all times.
Absolutely. And if you don't know, for those of you that's never been in a business that has receivables like that come on trucks, I was a long time ago. And what a nuisance that is, man. In the middle of the day, you're trying to get something done, and all of a sudden there's somebody knocking on, hey man, there's a semi-trailer out back. Like, crud. Okay, let's go pull something.
And we also help on more on the logistics side too. I mean, we help with the outbounds and the inbounds. So, we arrange pickups from all the major carriers. So if you're a small e-commerce brand sending out 100 packages a day, all you need to do is you pass a product that's been packaged to us, and we'll handle it from there. And we aggregate that amongst the facilities. So we have economies of scale and get to pass that labor cost and the shipping cost savings onto our members. So there's a big component of the logistics services that, we have a lot of companies that actually come to us from self-storage. They're in 4, 5, 6 self-storage spaces. And at some point that breaks. And it's definitely a more affordable model, but at some point you have to make a decision. Do I want to keep growing my business professionally, or do I want to stay, limited by storage units? And generally, it breaks at some point. So, our model is kind of the next stage. If they're not ready to go lease a 2,000 square foot industrial space, if they can even find it, we're the next kind of stepping stone for that journey.
Right. Yeah. Like you mentioned there, if you can even find it, let alone being able to find it on flexible terms, which it sounds like that's
Right.
another perk that you guys have, where it's not, hey, we're not tied in for 5 or 10 years on an industrial space. It is, I don't know what your lease, I'm sure they have varying lease terms, but it's probably much shorter duration, I would guess.
Yeah. It's 3 to 12 month terms. And generally, customers don't leave us after their initial term. They like the flexibility. Something changes, we've had companies grow from our smallest space to our largest space, 200 square feet to 2,000 square feet over the course of a year. And then they're ready for their next, traditional term, and they'll go find a 5,000 square foot building to lease on a 5-year basis, but they might not be ready for that for a number of reasons when they first join us.
Right. Oh, that's really, really cool. You mentioned the term member, and I'm looking here at your website, and one of the line items across the top on the menu bar, I guess that's what that's called, is membership perks. What is that?
Yeah, we touched on some of it. I mean, that's the technology partnerships, meaning the shipping platform, the receiving for customers, the outbound. So setting up, they don't have to set up accounts with FedEx, UPS, right? They can just come into us and use our accounts and ship out to their customers, and that way they get aggregated shipping discounts as well. And then partnerships to help them scale their company. If you need help building your Shopify store, we have somebody that can help you. If you need insurance, we can help you there. We've just built a bunch of partnerships that people get access to just through becoming a member of Portal.
Got it. And why did you guys select the term member versus, client or something else, or, where did that name or that idea of calling people members come from?
I think it builds community. It builds, being a part of something. I mean, there's, a lot of folks that meet each other within the warehouse. We just had a packaging company join us, and he's now supplying packaging. He started supplying packaging in one facility, and now he's expanding to others. And now he actually expanded to others. So he's in 2, maybe in 3 facilities here in the near future. So that also helps him save on shipping to his customers outside of Portal as well.
Right. No, that's really, really cool. I love this model. This is really unique. And you guys you're aware that you're filling a gap in the market that's probably existed for a long time. What are some challenges, I guess, that you guys see in scaling this, and then how do maybe you intend on overcoming those?
Yeah, I'd say one of the biggest challenges in any real estate operating business has this challenge is growing efficiently, smartly, and quickly enough to grow. So we see demand for this all across the country. Some markets are hard to break into. The coastal markets are very expensive on an industrial basis. Our base rent is a function of the base rent of the real estate. So there's just some markets are cost prohibitive, and we're getting creative on deal structure to solve that. So I'd say our limiting factor is just real estate, and which is a good problem to have, because if we're having that issue, we know that the companies that we're servicing are also having that issue. But at this point, we've really built out a really strong set of infrastructure. We spent most of last year building out our operations from top to bottom, and we think this year will be a big year for us on growth. So, but the more deal flow we get, the faster we can grow the company, and it's just a matter of finding the right deals in a creative way.
Right. Very, very cool. Andrew, you have any thoughts on that?
Yeah, I think the challenges, come just in logistics, but that's what we're solving for. So I think the way we've built out our infrastructure and all of our systems over the last year just, really set us up for scale.
I got a question, really. I touched on this a little bit earlier, but it was really about how you underwrite a deal. Like when you look at an opportunity, like what makes it, this is going to be a great place to put a co-warehousing space, or I guess that, and again, I'm probably using the wrong word there, but how do you do that? I mean, that's kind of, just love an answer to that if you can.
Yeah, we spend a significant amount of time underwriting markets, doing our diligence. Generally before we open a facility, we'll have a list of about 200 companies that have signed up for the product that are waiting for us to open, so that we know that the demand is there. And we've built out a really powerful demand generating system that's proprietary, that helps us basically determine the demand levels. So we'll run ads across the internet, across different platforms to kind of market something that's coming soon, and then hear from the actual customer. We want to make sure the demand is there. We're not picking the wrong pocket. And there's obviously better places in a city than others, like everything in real estate. We want to make sure we're in the right space to make sure that the occupancy comes to us. But we're in terms of our occupancy history, we're really excited because we filled up our our two first facilities to 100% occupancy in under 10 months.
Wow.
And that's at, very, premium market rents and honestly a wait list in these facilities. So the demand is there. It's just about being smart about making the right kind of decision on where to place the facility.
Is there a type of building in particular that works? And one, obviously, maybe that's a stupid question because you just mentioned a building in Brooklyn with a 7th floor that you've converted into this. But I'll ask the question anyway. But a type of building that works for this and a type of building that just doesn't?
Yeah, what we like, the criteria that we look for is generally like adequate. We look for criteria like dock doors, parking, location. Those are the three main kind of things that we look for. Clear height isn't as important to us, so we can kind of fit into these buildings that you wouldn't think have a useful life in industrial anymore, because an Amazon wouldn't be able to work there. Our companies generally have no issue with that. So honestly, most buildings work, and what we really try to find is these Class B and Class C buildings that are relatively priced well, in good pockets of town and gentrifying industrial neighborhood. We like to say we go to where the breweries are, because once a brewery starts to pop up, these are industrial pockets that are turning over, and our product would work well there.
Got it. And I think that's probably the and again, filling up an entire space in 10 months, that's impressive. But because you're getting premium rents, like the numbers make sense, I would imagine, a lot sooner in the process than maybe it would be if it was just a standard industrial building, no?
Yeah, it all comes down to the real estate cost, the base cost. If we went and paid Class A rent and it doesn't really provide value to our customers, or Class A pricing on a per foot basis, we don't need to do that. I mean, it would work just as well, but if we can find value in a B or C building in a good part of town that we know we can bring the rents to and bring the occupancy in, we'd rather do that than pay up for a higher quality building.
Got it. Understood. So can somebody approach you today if I called you to say, hey, Alex and Andrew, I've got a building that I think would be a great fit for this. I own it. Am I an ideal client for you?
Absolutely. And we're looking at opportunities all across the country. I'd say to like an ownership, to the audience out there that has a building, we're generating the ownership like 25 to 35% NOI premiums on the real estate, right, per a market basis. So it's compelling from a market rent perspective, and we're also breathing life into some properties that maybe have stagnated. So absolutely, we are looking at management deals across the country and are open.
Awesome. No, and if you're listening to this, Alex just said it. If you've got a building that kind of fits this profile, reach out to these guys. And of course, their information will be included here in the show notes at the end of it. And just find out if this is a good fit. Is there a particular size? Like, what's a minimum size that you would need in order to turn a building into what you guys are doing with it?
Great question, Sam. We generally look for 40,000 square feet and above. So okay. 40 to 80,000 square feet size range is what we find works best from an economies of scale perspective. Now, we could flex down, we can flex up, but generally 40,000 is our starting point.
Got it. Okay. 40,000 square feet or bigger. This has been fantastic. Alex and Andrew, thank you for taking the time to come on today. And really, I mean, I don't know what we got, 900 episodes or something on this show at this point, and we haven't had anybody talk about what you guys are doing right now. So obviously you're aware that you're onto something unique, and obviously filling a building in under 10 months proves that is also true. So certainly appreciate your guys' time today. Any last thoughts on your business, on the model, or anything else you guys want to share here before we sign off?
Thanks for having us, Sam. If you're ever out in Phoenix, Salt Lake, LA, Brooklyn, or maybe more markets, come by, check the space out. I think you'll find it really cool.
Fantastic.
Appreciate you having us on.
Absolutely. No, the pleasure was mine. If our listeners want to get in touch with you and learn more about you, what is the best way to do that?
Yeah, my email is alex@join-portal.com. Andrew's is andrew@join-portal.com, or you can go to our website, join-portal.com, and reach out to us there.
Fantastic. We'll make sure we include that there in the show notes, join-portal.com. Alex and Andrew, thank you again for coming on the show today. I appreciate it.
Thanks, Sam.
Hey, thanks for listening to the How to Scale Commercial Real Estate podcast. If you can do me a favor and subscribe and leave us a review on Apple Podcasts, Spotify, Google Podcasts, whatever platform it is you use to listen, if you can do that for us, that would be a fantastic help to the show. It helps us both attract new listeners as well as rank higher on those directories. So appreciate you listening. Thanks so much, and hope to catch you on the next episode.